Hey traders, Raghi here, and we're going to kick off tonight's video with a look at the yen and the Dow and what's been a really busy day for the BOJ and what's been happening here in the US. So let's talk about this move here on the dollar yen. So a lot of you might be used to looking at the Japanese yen by way of something like JY or the FXY. So let's discuss this one aspect of the Forex view of the Japanese yen versus the typical ETF or futures view of the Japanese yen. And it's not complicated, but it's something that's hugely important. So first of all, if you're looking at FXY or JY, you're actually looking at yen versus US dollar. The base currency or the first currency is the Japanese yen, and obviously that relegates the US to the second currency. So it's just the way the currencies are quoted, and directionally it affects it in that if you are long yen, if you want to buy yen, you would buy FXY. If you want to short it, you'd short FXY because it's the yen is the base currency. So let's take a look at the JY futures. So now we're talking about another way to look at Japanese yen, but once again, you're really looking at Japanese yen as the base or first currency, US dollar is the second. If you want to go long, buy yen, that means you'd buy JY. If you want to sell yen or get short, you would then, sell JY. Okay, so that's the way this works. Now, an uptrend in the yen would be an uptrend on FXY or JY. Let's take this over to the Forex translation, which is, this is where I hang my hat. So in the Forex translation of a yen play, now notice, you can see it in the pair. The first currency is the US dollar. The second currency is the Japanese yen. If I want to play yen strength, I actually short the US dollar versus Japanese yen. And if I want to play yen weakness, then I buy this particular pair. Because again, the US dollar is the first currency here as opposed to the other two examples. So I mention that because if you ever join me in the morning chat or the afternoon breakout sessions or any of my other free videos, and you're looking at different instruments, make sure you understand the way in which the pair is quoted. Really important there, okay? I know that's kind of basic, but for those of you coming from, say, an equities or futures viewpoint, dollar yen might seem very confusing until I explain that there. So what's happening right now? This is a massive carry unwind. That's really it. And why do we even have the carry wind up to begin with? Well, we have to take a look at the Dow to really get a good look at that. So for the better part of, as you can see here, let's say the latter part of January to about the early part of February. So we're really talking about the ECB low that was put in right here. You can see that pretty clearly, the ECB low. And then you move forward to the high we put in on the first, and then kind of selling off. So we're talking about the 20th to about February 1st, just under 2 weeks. We had a market that started to correct. Now, right here was the first of two fairly significant short positions that I put on in the Dow. And any of you that follow what I do, that 34 EMA wave, when the market's trending downward at a 4 to 6 o'clock angle with these red grab candles, that's pretty much a screaming sell. But as we climbed up, as this market moved up higher through this section right here, this was risk appetite. This was the market saying, okay, this is looking good. Here are all the reasons the Dow should be up. Yellen's not going to hike rates. ECB is going to add stimulus. Add in your narrative. All of that was carrying the Dow higher. And that's when traders decide they're going to do what? They're going to sell yen, sell or borrow yen, and use that to fund the purchase of what would be expectedly higher yielding assets, namely equities most of the time. So you borrow yen, which is unbelievably inexpensive to do, And when you feel that risk appetite or risk is on the table, you take that borrowed money and you buy things that typically have higher risk, but you expect a higher return. No guts, no glory, right? So that's what you see here. That's what the carry is. Carries typically only get put on in any significant way, a carry trade, sell yen and buy Australian dollar, sell yen and buy New Zealand dollar. You basically sell yen and buy a currency that has a higher central bank rate. It's a pure interest rate differential. Yes, you can hear a lot about the safe haven plays, but there are other ways to do that. The reason you would borrow or sell yen is for the carry. So we see that, but then all of a sudden what happens? Well, so far throughout February, we've seen really nothing but fairly consistent moves to the downside, and none more so than the last 5 sessions. Okay, we've really started to organize. We haven't had organized movement like this in quite some time. I would even say not since probably the early to mid part of January. So all of a sudden now it's becoming pretty clear that this Dow really isn't moving up higher, despite the fact that Chairman Yellen was dovish today in her first day of testimony, but maybe not dovish enough. You know, your zombie horde Dow bulls, your zombie horde equities bulls, they want low interest rates forever, but they want the Fed to say things are getting better. You know, we have optimism about the future, but we're going to have low rates longer. And if you don't get that just right, like Baby Bear in the fairy tale, all hell breaks loose. And that's what's happening. She wasn't dovish enough. Really? Well, this market's in a downtrend. Are we taking out those China lows? All right. You hear me talk a lot about the ECB helping put a low in the market. You know, when you look back at China lows, you got to rewind the clock back to last August. The S&P has pierced this low. We've gone lower than this before, and then we snap back up. But the Dow hasn't, and I think that is hugely significant. The Dow hasn't matched those 2% deval of the yuan lows. We may head down there, sure, but we haven't yet. So when I look at the weekly chart of the Dow, one of the things that I'm doing is I'm pricing calls. I don't want to step in and buy Dow here. Okay, because stepping in and buying Dow for me as a Forex trader would be the same thing as stepping in and playing dollar yen to the long side. That would be a US dollar buy and a yen short. Neither of those scenarios right now make any sense. If Fed Chairwoman Yellen basically said that, yeah, I think we're going to meet our 2% inflation trajectory, but down the road, and she's not persuading Fed Fund futures traders in the least to push this contract, the FFU, or even FFZ contracts lower, heck, I'm not even looking at near-term contracts like June. Okay, if we're not seeing any movement to the downside in FFM, that's the June contract, the September contract, or even the December contract of Fed Fund futures, she's convinced exactly really nobody that rates are going up, because therefore we would see the FF contracts moving lower. That's the way that works. Okay, the US dollar continues to move on the same story. Here we are smashing through 96. All right, we're smashing through 96. Now, some of you might say, well, Raghi, how can we sell yen? I don't want you to do that. I don't, so you're saying dollar yen doesn't work. And I'm saying exactly that is correct, because you'd be selling yen against a very weak currency. I'm not recommending selling yen here at all. All right, what I would recommend is continuing to look for yen buys, because I am still an equities bear. So you have to ask yourself, here's a litmus test. Until you are bullish on equities, that should start with a look at the Asian markets, finding some stability. That should then go to the NASDAQ and some interest in the FANG stocks. We've been talking about this narrative, gang, since last December. On December 30th, I did a webinar and I talked about the overall 2016 picture that I was looking at least Q1 into Q2. And the idea was, as long as we're risk off, you want to buy yen. So until names like Facebook, Amazon, Netflix, Google, until these names are leveling out and therefore giving the NASDAQ some stability. We're not going to see that then move over into the S&P, and we're certainly not going to finally see that in the Dow, which is my preferred contract to trade. If we're trading down near the 200 period simple moving average on the weekly, way down here, the bottom of this choppy support range, I don't mind pricing calls in here, right? I'm going to get increasingly aggressive about it the lower we go. But that still means we have possibly another 5 to about 600 points lower we could go. That means we're going to see that much more potential yen strength. Where would I consider selling yen? When we're kind of at the tail end of what I feel the oversold move could be. In the meanwhile, as long as you're a Dow bear, you must then be a yen bull. That's the way these two markets work. Now, where can you be a yen bull? What's some of the ideal places to do it? That takes us back to the heat map. That takes us back to, how do I pit one individual currency story against another? And in tonight's premium video, I'm going to give you that complete list of where you can look to be a yen bull, where the best contrasts are. And if you want to start thinking a little further down the line, because it is a slightly longer term play of, hey, maybe there is an opportunity to play a Dow bounce, and in that case, a yen sell, what are the pairs that you would look at? Because the same pairs you would look at to buy yen now are not necessarily going to be the same pairs that you will want to sell yen against later on. So I hope this has cleared up a lot of, I think, confusion between what the risk environment and the Dow is telling us, what's happening right now with this massive carry unwind, why the carry happened, why we're getting this kind of outflow now and this unwind right now. The last thing the BOJ wants is a strong yen. I do acknowledge that. So yen sellers are also thinking, does intervention save the day? Please be aware, if you get an intervention spike, okay, this is just a PSA I'm giving you. If you are short yen and you've been hating me for the last 12 minutes, as I tell you, it's the wrong side to be on for now. If you are shorting yen, if you get that intervention spike, take advantage of it. It's a gift, because if the overall risk environment is still down, the market will take that intervention for a session, maybe two, and then it's going to go right back to the overarching theme, which is, what is the risk environment? And I'm telling you, I've sat through multiple yen interventions since I've been trading Forex 99 2000. They don't last. The market snaps back, maybe not to where it was, but awful close to that neighborhood. So if you get an intervention spike and you are short yen, please don't be double mule. It is not greedy bastard time. Take the gift. If you want to trail the stop, that's great. But I'm telling you, there's a way these yen interventions typically work. Look back on your charts, on a weekly chart, and you'll see exactly what I mean. They typically don't last. So there's my PSA. If you have any questions about this, join me in the morning chat at Simpler Forex. I also do afternoon breakout sessions where we talk a little bit more about equities and futures Monday, Wednesday, and Friday. So I look forward to seeing you there, and we'll talk more about how we could take advantage of this yen.